Let's go, guys.
Well, look, I had to. Here's where I am. I am at the Jersey Shore right now in Brigantine, and I know my kids are going to be barreling through that door in like 10 minutes. And
seriously?
Well, this is how this goes. So I have to text my wife.
You're not taking this podcast seriously.
Oh my gosh. I am. I'm not on the beach right now, Sam. If I weren't taking it seriously, maybe I would.
Unbelievable. Unfucking believable.
I would be on the
Me and Asad are killing ourselves over here, and you're just having a vacation, just kicking your feet back.
I shower every time.
Sam, where are you again right now? What room are you in what town right now?
That's not your business.
This is Topline.
This episode of Topline is brought to you by Contract Book. Raise your hand if you love managing contracts. We didn't think so. Contract Book offers a holistic contract management platform equipped to handle agreements of all shapes and sizes. Through automation and centralized management, they unlock the value of your data while creating lovable contracting moments for teams and organizations. Visit contractbook.com to take control of your contracts for good. Asad, how you doing?
I'm okay. I slept horribly yesterday. I had a dream where I was reading about Mark Zuckerberg and Elon Musk potentially fighting, and how Mark Zuckerberg has this amazing time for this challenge called the Murphy Challenge.
Yeah, Scott.
So I dreamt about doing the Murphy Challenge. It was like a really intense dream. Like I woke up sweating, like I was counting my push-ups and shit. So I had a very disruptive sleep. That's me.
Okay.
Sorry you weren't in the cage match with them.
I want to be the referee.
You know that Elon has my neck problem. Like I really think you should probably try and avoid this.
Because he'd wrestle the sumo wrestler or something, right?
Yeah, exactly.
That's not a good idea.
AJ, how you doing, buddy?
I'm doing well. It's like, are you AJ? How are you doing? I slept really well last night. I've had as I mentioned, we're down at the shore. My family's out on the beach. I am here because I take this seriously. I'm here filming with you guys and trying to de-stress a little bit, but that will come tomorrow. Tomorrow is my day off to go hang out at the beach with the girls.
That's exciting.
Then I have end of quarter. So,
I mean, the quarter ends on Friday.
It does. It sure does.
Sam, very excited for this quarter to be in the rearview mirror.
Yeah, the rearview mirror.
Yeah.
Be careful what you wish for.
How you doing, Sam?
I'm okay. Pretty good. I no longer have an apartment in Manhattan. To your point of your question, I now live in Sag Harbor. I updated my vehicle registration, my driver's license. I went to the DMV. I was in and out in 10 minutes. It was remarkable. And I've got 3 dogs around me. And there was a thunderstorm and lightning storm the other night. And Oswald, who has 3.5 legs and normally is a little bit distant, a little bit at the end of the bed, and he just needed Papa. He needed Papa. And so he kept crawling, as deep as he could burrow into my nook. That's where he wanted to be. So,
I had a dog who hated thunderstorms, and she developed this huge anxiety against thunderstorms, then rain. But then she started not liking cloudy weather because she figured out cloudy weather means potentially rain. And so she would have these really intense reactions where she would have panic attacks. She would shake. And so we found these CBD dog treats that you can give a dog.
Yep.
And they worked really well. She'd be sitting there in the corner drooling, but it was way better than shaking.
You're right. I should have thought of something because he was panting. I was up from 1:30 to 4 a.m, just trying to calm him down.
Good father.
Yeah. One day it'll be with humans, but for now it's with canines.
This is great practice.
Sam, one question, the really important question. Have you updated your LinkedIn location to where you are now?
Oh my God. I haven't.
Well, then this is not real, Sam. You're still in New York.
I've updated other apps that I'm on, but not my LinkedIn.
Like Uber Eats.
Uber Eats, exactly. AJ, should we bring in our guest?
Let's bring in Mark. He's been in the waiting room.
Okay, awesome.
Too long.
Mark.
Hey, guys.
How you doing?
What's up?
Hi, Mark.
Hey, guys. How are you? Are we recording?
Yeah, this is real.
We're in.
Mark's making the joke, and that like every week for those listeners have said, "Oh, next week we're gonna have Mark Roberge. Next week we're gonna have Mark Roberge," and we've done like 3 fake outs with you.
And people won't believe it. It's like the child who's being wolf.
Gosh, that's funny. I'm sorry. I didn't know that was on my end. My apologies.
No, it's not on your end. It's definitely on our end.
Oh, okay, cool. Thank God.
Let him think it's on his end. Yeah.
Yeah. Mark, it is good to finally have you. Definitely excited. And Sam and Asad and myself are, want to connect and chat a little bit about the world. But like, I think before getting into it, I know you're seasoned in having these types of conversations, but I think your intro would be really helpful for those that aren't familiar with who you are and your background.
Sure. Yeah. So I spent about 15, 20 years as an entrepreneur, like many of you. The last one I did on the operating side was HubSpot. I was the 4th employee there and first salesperson, and became the founding CRO through that process and through the IPO. It took about 9 years. And then I wrote a book called The Sales Acceleration Formula. It was a bit about that journey and how I hadn't been in sales before, was more of a programmer, engineer, and used that skill set to rethink scaling sales. And then that led to joining the faculty at Harvard Business School, where I built the sales curriculum there and still teach that. And then that kind of led to starting a VC firm, where about a 5-year gap between HubSpot and Stage 2 Capital, which is our firm. I did a lot of investing and advising, mostly on the go-to-market side, like many of you guys do, and started to see patterns around unnecessary failure because of poor insight and strategy by the executive team and poor guidance by the board on when to scale sales and how fast. And so I started to develop another framework called the Science of Scaling, to help companies almost calculate when they are ready to scale and how fast. And that became part of the foundation for Stage 2 Capital. The other piece being that we have raised our 3 funds from about 500 CROs and CMOs. So trying to fuel this unique perspective and guidance on the best practices of go-to-market, specifically in a startup context. And now I'm doing this podcast.
It should be 500 CROs and CMOs and 1 AJ who's now found this.
Yes, there's some folks that don't quite fit that. Like
there are a couple of us,
but equally, even more valuable, honestly, because it's like then they need someone with a unique perspective that's not a CRO, CMO. So we have occasional engineering leader and CFO and all that kind of stuff. Yeah.
Mark, bad boards and bad operators, that doesn't exist.
I don't know if I used the word bad, AJ. I said in a very, very specific strategic decision, the guidance perhaps was subpar.
Yeah. Well, I remember exactly where I was when a buddy of mine told me about Sales Acceleration Formula. I was walking with my daughters, my twins. They were like 6 months old at the time. And a friend of mine, Ben Lampson, who is the VP of sales at Paperspace now, called me. He was like, "Hey, you have to read this book." I'm like, "I've read all of these stupid books. I've read all of these books. They're so dumb. I'm not reading another one of the books." No. It's the former CRO of HubSpot. It's really good. It doesn't it's not a sales brain type of book. I'm like, I don't even know what that means, but let me read it. I read it and I was like, holy shit, this is actually pretty good. It's like the AI sales book before AI. I can't remember exactly which chapter it was, but there was something in this, just call it a game. We gamified it where the sales team went up to the board and they had points, and they basically could say if this is a committed op, I'm going to bet, they had betting chips basically. But you if you won, you won 10x, but if you lost, you lost it. So you had to play the game very specifically in this AI betting type of board. And we had our best quarter we've ever had because of that game.
Oh, and I didn't know that.
Yeah, you didn't know that. Here we are. And so I do look at I remember the next 6 months to a year, be Sales Acceleration Formula, that's great. And then the next trendy thing happened. I was like, okay. So but
nice. Well, I'm glad that everyone has little tidbits sometimes that they pulled on and made an impact, and that really makes me happy. So thanks for sharing that.
So we tend to talk about like current events and things that are going on. And every week it just seems like there's just a roller coaster for us as operators, CEOs, of just like things to follow. But I think one of the things that we've found our listeners and Asad brings up is just the generative AI and where it's headed in different industries. And a big part of the conversation that I've heard you speak about is just like how you're seeing the world in 12 months. And I know it was just like a month and a half ago that I heard this. I guess one, like, what is that point of view? And like, is that point of view, do you feel like it's changing like every week? They're like, oh, I'm going down, or is it like, you're still seeing things that similarly that you saw like a month ago?
Yeah, I think it's like refining. I don't think it's like, I don't think I'm questioning a lot of prior comments, but getting more specificity on it. And I actually wrote an article earlier this month. This is June of 2023, depending on when you're listening to this, that I put out on LinkedIn in the Stage 2 blog about my current take on AI. And, I think from a high level, this is an aggregation of what a lot of people are saying. And so you probably heard a lot of these points, but I'll try to give you like high level. I feel like we're definitely in the hype stage, like 1997, 1998 in the web. I feel like back then the web was basically putting media online, like the newspaper, and it was putting like your company brochure online. Like it wasn't Snowflake, it wasn't Zoom, it wasn't Stripe, right? Those are the real big winners. And we couldn't conceptualize them. In fact, if someone tried to start Uber in 1997, it probably would have failed because we weren't ready. And that's what we're seeing a lot of is like these really like, I don't know, not motivational, not inspiring, not interesting AI iterations, in my opinion. It's like making SDR like 10% more productive, you can make your forecast like, oh, we've been doing it this way. We just call it AI now. Like, I don't know. And also the valuations are crazy. I know you all have been talking about that. And why is that happening? That's a good question for us to jump into. So there's hype, but at the same time, like you can't sit on the sideline either. So in my world, I can't like redefine Stage 2 as an AI fund because that would just like investing in crypto like 2 years ago. At the same time, it is, I think, just like the web, going to completely change most of society and completely change the big winners that we see in the public markets. I mean, like, I know there was a banker that was talking to me like, well, I think all the incumbents will just take it, right? And I'm like, I don't know. Like, who are the big $1 trillion companies today? Like Amazon, Google, Meta, like Apple. Like most of those weren't even around before the internet. And the one that was, Apple, wasn't really a good company then. So I don't know if history says that like the incumbents, I don't even think there's a historical point where the incumbents did take the market.
Cloud is an example, right? Like if Amazon, Microsoft, Google, they were not part of the cohort that led the database movement. Like none of those companies were at the top.
Exactly.
Right.
Exactly. So I think it's disruptive. So the point is we can't sit on the sidelines. So what we've done at Stage 2 is we've gone into like what we think we know best, which is go to market. So I've been developing a lot of my thesis on like, where are the go to market winners from a startup perspective? Because we can almost like kind of influence that, right? Because we have so many CROs that are the buyers. And so we've created this lab to try to put those together. I'll give you one taste and then I'll let you ask the next question, AJ or whoever. But one example in there is like, we look for innovator's dilemma from the great work of Clay Christensen, which means like the big companies are aware of this, but they're unwilling to go there because it could be cannibalistic to their strategy. And in the world of go-to-market tech, a lot of these current incumbents are based on a per seat model, whether you're a CRM or you're Gone or SalesLoft or whatever. And if someone walked into these executives and was like, hey, I'm working on a product that's going to get rid of all the seats, like I think they would pause and not want to do that. So it just seems like the incumbents will probably support Copilot AI products that will enhance the productivity of the existing seats, but they may not go so far to the displacement AI opportunities. And that may be a good opportunity for entrepreneurs because of the innovators dilemma. Now, there's a societal impact of whether we should even do that, which I don't know whether we should or not. But that's an example of like a unique entrepreneurial opportunity in go-to-market AI tech.
Even on the co-pilot side of things, it seems like there are going to be two types of co-pilots. Like one is you've got a Series C, D, E, or publicly traded company that takes AI, slaps it onto what they do. They're like, look at us, we're an AI company, right? And it's just not inspiring. And I've seen the demos. I saw Salesforce's demo right now of AI being integrated onto the talent side. It was probably one of the most uninspiring demos I've ever seen in my life. On the flip side, there's an opportunity for early stage companies to go AI native, rethink workflows, and even create a co-pilot that is from the ground up AI native. And I think there is a separation between these two groups. Would you agree?
Totally. And I would say, like Asad, like you could probably push that out even further. That's not restricted to go to market. Let's just take a major insurance carrier right now, right? Like this major insurance carrier. And they're like, they've got a ton of underwriters. And they're reading about, how AI diagnosed a cancer patient that a doctor was struggling with for 4 months, right? Like, it's like, well, it's not hard for me to hypothesize that like AI is pretty close to be able to underwrite insurance policies better than a human. And so like, if I'm a CEO of a major insurance carrier, like, on one hand, I'm like, damn, I got to figure this out before the competition does, because they're going to be able to figure this out and pass those savings along to the consumer. On the other hand, I have 5,000 underwriters. I can't just go up to Wall Street and be like, yeah, we're going to get rid of all of them. There's a cultural, political, societal barrier of change management that like some like person that quits the insurance carrier that knows how it works and hires a bunch of AI people to build a new insurance carrier from the ground up that doesn't have to lay off 5,000 underwriters could disrupt that category. And we can apply that to anything. Right? That's kind of what you're saying. So, so it's like, there's this greenfield advantage that you could have with a disruptive technology like this.
You can see it in valuations right now. So if you look at the valuations of a Series C or D stage company, or even publicly traded, Ched is a really good example of this. They integrate OpenAI, and then they think they're going to get a bump in valuations if you're publicly traded, but Ched's valuation went down. And on the flip side, privately, you aren't seeing a jump in valuations on ease with fundraising for those growth stage companies. Whereas on the other side, you're noticing valuations of application layer companies that are AI native of 40 to 50x, and then the infrastructure LLM layer is like at 50 to 100x. So you can see that the market even differentiates between companies that are going to struggle with innovators' dilemma and those that won't. Mark, one of the implications of AI is that it's an amplification tool, right? It makes you faster and better. And that if that's true, then we are going to have people that are way more productive in the near future than they are today. A lot of the people like Sam Altman talk about an increase of 40 to 50% in productivity by the end of this year, which is meaningful. But I think in the coming years, it would be 3x, 4x, 5x compared to now. So the big question becomes that it is going to change how we do everything, from the number of employees that we have in an organization to the pricing models we have to take forward. Seat-based pricing doesn't work if every company has less people. The question becomes like, how long will this take? So when you think about the implications of AI on a go-to-market team, how they are structured, the things they do, the people that they hire, when do you think the big changes are going to come, and what are those big changes?
Ooh.
Easy question.
The timing thing baffles me, because like the one that the four of us lived through was the web. That's the closest thing that we could conceptualize, and I still feel like we're still figuring that out. Like we're still incorporating and leveraging the powers of the internet and cloud in reevaluating go-to-market. It's been slow, and it's been 20 years in the making. So there's that data point in my mind, which is like, okay. But then there's the counter argument that says like a big part of the AI revolution isn't dependent on human adoption.
Yeah.
And like AI for many reasons can create a flywheel that accelerates this, what Sam Altman talks about is like when it wakes up, right? It's like suddenly you join, like when it wakes up, like I could be on the Zoom call with the three of you, but I'm actually not with you. I'm with AI, but it's so good that it's tricked me. And it's like, oh gosh, that gets scary.
Damn,
Right?
I've
So,
never
like-
seen that background of yours. Are you sure? Is that a real background? Are you
Yeah,
really in
exactly.
Sag Harbor?
Zoom's got avatars now. I was going to show up as like a cow.
Yeah, exactly. So that's scary. So I think there's counter arguments there that makes that the timing thing us very tricky. My guess would be faster than the web, maybe twice as fast if you want me to get really quantitative. And so whatever you thought about, like as like the internet affected go-to-market technology, let's say that, I guess Salesforce was kind of started like 98 or something like that. Like where were they 5 years later, 10 years later, 15 years later with all these technologies? Maybe we'll get there twice as fast. And then what that looks like, I mean, let's just look at the SDR role. And again, I don't know if society, we should do this, but it does seem like if you look at a 50-person SDR team and just generalize what they do, which is like they go out on a quarterly basis, they find like 1,000 new accounts that look like it fits the ICP. They do research on those accounts. They write 16 sequence like outreaches or cadences to put into their thing that are semi-personalized, but semi-solved for scale. And they hope to yield like whatever, 10 or 15 appointments each month. And then like that can all be done better, it seems like, by AI almost now. So you can kind of eliminate that whole thing. The only thing that's tricky is like, God forbid the prospect actually picks up the phone. That seems like it's the hardest thing to navigate that conversation, but that seems like we can.
That's not even impossible. That's possible.
It's not.
Yeah.
Right, Sam. So it's like, you start looking at that and then you start thinking about even bigger things like, okay, a typical go-to-market org has a CRO, and under the CRO is a VP of marketing, a VP of sales, a VP of customer success. And underneath those are like, let's just look at the sales org. There's a bunch of sales directors and they all have frontline managers, and those frontline managers each have 8 reps and they're coaching them. And that's what the reps are doing. Like, could that whole thing be eliminated by a data scientist that runs the AI?
Yeah. So I got a question. So exactly to that point, this feels like we're talking about, we're in the middle of a quote unquote tech downturn, right? And maybe it's a function of interest rates, and maybe interest rates will ease maybe sometime in Q2 of next year. And there's a lot of people sort of holding their breath a little bit, waiting for some form of the good times to come back. But meanwhile, exactly what you said is on my mind, which is, okay, so if you are a seat-based company, or you are just selling to salespeople or marketing people, or you're a recruiting agency helping people hire salespeople, there's going to be, it seems, but I could be wrong, first of all, fewer salespeople, which means the TAM is shrinking for a large category of venture capital-backed companies. Relatedly, if you're moving from seat-based pricing to, it's like you're the innovator, to the point of Clay Christensen and Innovator's Dilemma. It's like, well, you're going to come in and you're going to be cheaper. And that means also that if TAM is price times quantity, lower price, lower quantity means that our expectation that, like, for example, I think stage 2 will always have a business because you're not Series C or D. But the people that write $100 or $200 million checks on the idea that the TAMs of these markets are trillions of dollars instead of tens of millions. Yeah, exactly. That's where I'm like, we've talked on the show before about, there's cyclicality to markets and the recession will pass. That's true. But the economy is a dynamic system. It's not a static system. It's not just that it shrinks and contracts. When it expands, it might come back in a totally different form or a subtly different form. But the point is that I guess that gives me pause for the ecosystem in which, all 4 of us operate, which is the venture capital backed high growth ecosystem, that the market for what we do might come back, but still be materially smaller than what we've been trained to believe over the last 15 years since we read the
I think it's a really good point.
Formula.
This is a really good point, Sam. And I think it's easier for me to remove AI from that equation and talk about it momentarily, because I've been like expressing distaste for the large multi-billion-dollar funds for like 5 years and what they've done to the ecosystem. And it's just like, I think the reason why so many multi-billion-dollar funds occurred was purely because they could and make a lot of money in terms of management fees. But it doesn't no one's really asking the question of like, if we have like, I don't know what the right number was, it's really extraordinary. I think there was like, 10 years ago, there's like a handful of multi-billion-dollar funds. And now there's like, I think hundreds, like 100, like a lot. So let's just say it's 20x, right? Have we really 20x'd the number of potential great entrepreneurs that are going to build those types of businesses that can sustain it? We haven't.
No.
Like we definitely like went through like a massive entrepreneurial movement from like 1995 to 2005. I remember going to college in the mid 90s. I don't think there was a single entrepreneur class. I don't remember a single classmate being like, I'm going to start a company. Like 98 and that whole thing like changed it. Like entrepreneurship became accessible and VC blew up. Like it became huge. But I think it's gotten way too big. So like Sam, we remove like AI from the equation and like
we still have a problem.
Yeah, the 2020, and 2021 growth fund vintages, funds that were writing Series B and above, I think those vintages are going to be terrible, really bad. Right. I think 2023 is actually going to be good. Like it's like, because that's happened after 01 and after 08, it's like, it's less competitive. Valuations are down to, again, AI aside, back to normal. Like it's interesting. Now you layer AI into that, Sam. Changed a lot. It's like part of me feels like I'm even more excited to invest now because we're about to embark on a size of a disruption, tech disruptions, and that's what our work depends on, that we haven't seen in 20 years. And like there's probably people that want exposure to AI and you can't get it in the public markets. And there's entrepreneurs there. I don't know. Like, so I don't know.
I would just, because it's also just, I would just be so. Asad was telling us about, companies raising at still crazy multiples. Well, the multiples aren't, the concept of a multiple for some of these companies is irrelevant. It's just like, what percent of the company do the investors need to own? And what does that imply for post-money valuation? But I would, to your point, Mark, I would just be so hesitant to be writing checks right now. We don't know the size of these companies or what they're going to become. And I still don't know. We were talking about this 2 weeks ago or last week. Like I still worry that the entrepreneurs don't understand that they are fucking themselves. If they go in on $1 million ARR and they're at 100 million post money, like you're fucked. That's not a good thing. You're solving for dilution. It's the wrong. I don't know if you agree or disagree.
No, I've definitely. I mean, they're getting a taste of it now. Like there hasn't been entrepreneurs that tasted that in a while, and now you have a lot of them. There's a lot of people that raised money in 2021 at a 50x ratio, for 50x valuation. And now they're like, how do I grow into this? Which is stupid. The fact that they're even trying to grow into that. It's like, take your medicine and like raise at what you truly are valued at. Don't try to do stupid things that raise a burn and actually ruins your entire business. Well, so you finally have like near-term people who are like, yeah, don't do that.
I mean, I actually would say that the investment piece of it, I think, the other side of this equation is talent. So you take all these people off the market, they're now entrepreneurs. Those entrepreneurs are trying to hire the best talent. And then you make this hybrid and you've kind of like created mass chaos into this ecosystem. Like my take on this is actually that we're going to have to take a lot of pain and failures in the next 6 to 12 months.
Yes.
And Asad, Sam and I were texting, we know 2 companies that did massive layoffs on Monday. A tool that we're using today, I think I'll name it because they gave us a note. Calexa just shut down. It was in this the PLS, there's 30 companies in that product-led sales bucket, and that's like I think that's the next 6 to 12 months of that. Of just like let's kind of let some of that reset itself because there's a talent challenge that a lot of companies that are like riding this out are also trying to like make sure they have the right people in their seats and are like doing a little bit of a reset in the organization, org design, thinking about the muscle versus fat, like all of the things that their boards are telling them right now to do if they're in the better position to like stay the course for the next 3 to 4 years.
Yeah, you brought up, you actually steadied my thinking on this a little bit in your comment, AJ. It's like, it's a very unique time because like we've had down cycles in the last 20 years, 01 and 08. And what's weird about this, especially in our community of tech, is you have a major down cycle happening during a major hype cycle, which is crazy.
Crazy.
I've never seen, I don't know if that's happened, right? And like, it's like, like these are like, I don't think a lot of people, I do feel like there's tremendous synergies between these completely unrelated events, which was the correction in the main tech sector that occurred, which has led to, will lead to a lot of failure. It's led to a lot of talent being out there. And it's led to a mindset of we need to do more with less. That's a standalone isolated event. And the other standalone isolated event is AI has gone mainstream. Our grandparents know what AI is. That has happened in the last 6 months. Those two things, I think, fuel each other because like, I think the best sector, if I had to choose between finance, healthcare, tech, manufacturing, industrials, whatever, the best place early adopter for AI is tech. Yeah. Because like, they're just like experimental, fast moving, they're technical themselves. That's the best place to do it. And their current C-level mantra of like do more with less efficiency is perfect for AI. And your point, AJ, is like, what better way to build an AI company time when you don't have to compete for the tech talent?
Yeah.
So these two seemingly unrelated events have created this synergistic like flywheel for AI.
One of the things that's, sorry, AJ.
No, I was gonna say, if I'm an entrepreneur and you have like long-term thinking, you're starting a company today. We've talked a lot about Amazon's shareholder letters that Bezos has written, and like he did have this super long-term view of like the time is now in 96. Like this is going to turn into something big, and if we don't do it, someone else is. And I think there is some level of like the entrepreneurs today that are talking about these intersections that are happening, but also somehow like thinking about it from a future standpoint of like, this is what it's going to look like. Those are the really interesting conversations. And I'm guessing like, if you think about the pitches or the like raises that are happening now, there's a lot of founders that are trying to like forecast that out. The biggest challenge is like, we're talking about this right now is how do you forecast out this singular?
Yeah, you can't. And I think it's interesting, AJ, that you bring up the Bezos conversation, because I actually note that as an example in my article. Is like it gets back to like, you can have a big vision for what this is, and the best entrepreneurs and leaders have that, but there's a timing aspect too, right? Like we talked about earlier, like if you had the idea for Uber in 1996, it probably would have failed because society wasn't ready for 10 years. There was certain technical,
there was no iPhones either.
Yeah, there's like certain technical aspects, Sam, to your point. We've talked about that, you and I. And then also like society wasn't ready for that either, to just do that, right? And so, you know, and Bezos is a great example of like, if you got to have the big vision, but you have to also like figure out the beachhead to expand into that big vision. Because his thing, he didn't want to start an online bookstore. He recognized the value of web commerce. He wanted to build everything that he's done right now. But he started with books because at the time, people weren't comfortable buying anything else online. Mm-hmm. Like they were barely comfortable putting their credit card in. They were used to touching stuff, but you don't have to fucking touch a book. You know, like AJ, you're just like, read Sales Acceleration more. You know where you're going to get. It's 220 pages. It's bound. You know what it is. Just buy it here. Yeah. So like, that was a brilliant example. And I think that's the case here is like, if I'm an entrepreneur and I'm like, okay, I'm buying what Mark's saying. Like Salesforce isn't going to go into displacement technology AI, but like displacement AI is going to be where the biggest means are. So I want to do displacement, but the market's not ready. So I got to figure out a co-pilot beachhead that's ready that's going to fuel me for 3 years. That serves as a beautiful foundation for me to get to the displacement tool faster than everybody else.
Because human limitation is a factor, right? Like if you think you gave this example of CRMs when Salesforce came up in 1998, even right now, CRM adoption is at a minuscule rate, like compared to what you would have hoped by now it would have been at. So human limitation becomes a challenge here. We were talking to the CMO of a generative AI company on the marketing side, and they're building the technology. And so our question was, if this is making everyone 30% more productive, do you have 30% less people? And they themselves hadn't restructured or rethought how they're going to structure teams, which we found very interesting and fascinating. One of the things that on the other side of this that might be a counter opinion to the TAM argument is that every company will be smaller But will there be more companies that can find product market fit? With that 1% of seed that gets to Series E, now do you need to get to Series E, number one? And do you have more companies that go from idea to product market fit to at least trying to figure out, do we have a real business and building that go-to-market motion that's repeatable? There is a world in which you could say there'd be an increase over there that might, to some extent, offset the other side of the argument. So there's that. What do you think is driving this valuation behavior? Because the way that we look at it is that we're all wrestling with the challenges of the crazy valuations that came up in 2021 and early 2022, right? Like, so as soon as inflation came up, interest rates had to go up, and these companies have been the most impacted. They're still wrestling through it. And it's probably fair to say that at that growth stage, which is the most stuck stage, hundreds of companies are either going to go down 50, 60, 70% later this year, or are just going to shut down. And so we thought like at least some lessons would have been learned over here. But then now you look at these early stage AI companies, and I'm not talking about the LLMs as much actually, but more on the application layer. Like, in what world does a 40 to 50x multiple make sense for an early stage AI driven company? And these aren't the growth stage funds. These are the benchmarks. Like, these are companies that you would expect have learned the lesson, have been reflective, and are now not going to make the same mistakes again. They seem to be doing it.
Yeah, great question, Asad. And like, let me break down a couple pieces there and get to the valuation piece. So like, Sam, you were about bringing up the TAM as well. I was talking to Brent Queener, who he ran a bunch of things at Salesforce. I think at some point he ran like corp dev, and we got to know each other through the HubSpot days. Now he's a VC, and he put this idea in my head, which was AI will, if it plays out the way we think, it will dramatically decrease the CAC for acquiring any customer, which means that it will open up a whole new spectrum of products that were infeasible because you couldn't get a plumber to use a product for less than $500 CAC. But if that goes to 5, then suddenly there's a whole bunch of niche markets. So that kind of feeds like how you open that, Asad. On the other hand, like, a good AI model requires good data, and good data sits in a small set of companies. And that's an argument where the incumbents could have an advantage relative to other tech disruptions. So there's a whole big debate there. Now, like, OpenAI has overcome that to some degree and gotten ahead with great models and figured out how to, there's a lot of publicly available data that they rarely use as well. So let's just like put that there. Then Asad, you asked this really tough question, which is like, why are people paying this? We just went through this 2 years ago.
Really?
And now we're doing it again. And I'm trying to like speak to it from someone who's kind of like engrossed in it. And it's like, we had like in 2021, I told my investors, I'm like, we are looking heavily at all of our investments through the lens of a recessionary lens, because we don't think this world is real right now. And like, even when you do that, you get caught up in it. You know what I mean? Like, if you like, there's an argument to say like, when valuations are high like that, you should sit on the sideline, and when valuations are low right now in a non-AI world, you should be investing aggressively. And it's hard to do because you're getting so much capital from the LPs during the hype stage, and there's no capital now, right? So like, well, why do the LPs do that? Why are the LPs, and part of it in VC is probably because there's such a lag between the returns and when you deploy capital. I have a lot of institutions coming to me that are like, yeah, we totally screwed up in 2012 and we didn't go to VC. And now we run a pension fund, or we run an endowment, and the board of our school, who doesn't know anything about alternative asset classes, is like, why did you guys screw up? And so they're like, now we have to go into VC. But there's like, that says nothing about like what the opportunity of VC is today, just because the 10-year return on deployments that were made in 2012 and 2013 are good, right? So like, there's some cycle like in there, Asad, and now you've got this AI thing. And I think part of it is people are like, they're like, fuck, like that's another $1 billion AI company. We have to get in there. We have to get one too. We need one in our portfolio. We need exposure. They want to be able to brag to their LPs that they can get into them. And also I think there's a little bit of like hot potato where we know it's going to crash, but we don't know when. And if we can just if we can just sell before it crashes, we're good. I mean, in any sense, like what there's like 1 in 10 companies on the Fortune 500 list in 1950 are still there. So there's a long hot potato, no matter how you stretch it. Every business eventually kind of goes under. It's just, does it take 50 years or 2? I don't know.
There's also like
up on you there,
but then there's like this due diligence aspect, right? Where you're like, at least we will do this thorough due diligence. I read the memo for Jasper's investment. We can take this out if this is uncomfortable for people to keep in. But when I read that memo from Benchmark, I thought like, you're talking as if they built the model. Like it's actually a workflow solution on top of OpenAI. It's not like they built OpenAI, but the memo sounded like this was the next big thing. This was the AI revolution. And that to me is like a misstep from a due diligence perspective. So I get the other aspects of it, but then at least try to get into the right companies with these big investments. And Jasper to me doesn't seem like the same thing as investing in OpenAI.
Yes, I think like having talked to a lot of smart investors, I won't like people that I consider smart as investments share the sentiment, which is like, you have to be really, and I will say this is my take on it and echoing what these people are saying is like, you have to be extremely thoughtful about the unique value that this particular company is bringing to the table on top of all the infrastructure they're building it and whether that creates a sustainable moat. And I think a lot of people are skeptical as to whether Jasper has that.
Yeah.
I say we leave it in. Fuck them.
Let's do it.
I find it funny because I know Sam Insight is also an investor in Jasper.
Oh, never mind. I love Jasper. I think they just.
I use Jasper. I was on it right now.
I'm using it right now. This is me.
Look, I think this goes back to something that Mark said is that these companies are like they're thinking about this every day. So maybe yes, Jasper is built on OpenAI or whatever the case, but the fact that they're like the people in the business are like constantly iterating around what future is going to look like is something that they're making that bet and they're placing that bet as well. The general like this first off, this conversation is awesome. This is everything Asad has ever wanted. Yeah. And this is like every week he brings this up and we're like, yeah, for sure that's a thing. But like
I send the docket, I'm like generative AI, they're like,
yeah, we'll get to that. I think there's two things that said that's kind of really fascinating. I read a story today about someone that graduated in February and used ChatGPT to get their job. 100% of it. They like took the job profile, said like, hey, I'm applying for this job. I'm a graduate. What would a cover letter and a resume look like? Literally just sent that. Sick. And it was like, I'm currently now a forest ranger making 3 times as much as I thought I was going to. So we're sitting here. I think the thing that we have to remind ourselves, we're sitting here saying like everyone knows what it is. I don't know. That might be true, but 8 out of 10 people aren't using it. We're in this weird 98 world where if you're taking advantage of it, you're getting productivity gains right now. I have no idea how long that lasts and like when that kind of cuts. So it is going to change rapidly in the next 6 months. The other thing I was going to say is Asad actually brought up, he found a lead through ChatGPT that came in, which I think ties to what Mark is kind of talking about and like how this will work. And I think that that's an interesting example, Asad, if you wanted to share like how that worked, because I've never heard of something like this.
So I get this email from our team whenever there's certain types of leads that come in, I get flagged. And so this was a VC firm based out of Europe that was looking for a head of sales in England and a head of sales in the UK. So these are both like 100K deals for us, meaningful. And a VC relationship opens up their portfolio as well. And so we always ask, how'd you find us? They're like ChatGPT. We just went in there and said, who are the best go-to-market focused recruitment agencies that are tech related? And we popped up as the first name. And for some reason, the conviction that they had in terms of wanting to move forward with us was much higher than when people find us through a Google ad or some other channel. So we're now thinking of like, how do you optimize for this? The good thing is that GPT as well as Bard now give sources. So you can run searches, like for people listening in, run searches that should show you up, look at what those sources are, and then figure out how to optimize for that. That's like a very near-term way to drive some lead gen there, because it made sense that people would go to these tools to get vendor names. So yeah, that's
sick. I hadn't thought about that. So that's sick. And like, I'll throw a question back at you because it's like, it was a big thing for HubSpot, right? It's like all these plumbers were like, why? We just would get the plumber on the phone and be like, all right, you're in you're in Newton, Massachusetts. Let me search for Newton, Massachusetts plumber. And then we show them the first one is, damn it, that guy, Bob, I hate that guy. And they're showing number 2, Timmy used to work for me, damn it. So we'd have to teach them how to get up there. And it was all about writing good content. I was like, listen, people are going to try to sell you links and that's not good. Google wants to make the internet good. It's writing good content. That's why you have to do a blog. What do you think is the answer for ChatGPT if we replicated that out?
I think it's
if someone was
different.
like, hey, who's the best plumber in Newton? And they ask ChatGPT, how do you optimize that?
I think right now what you first do is you run those searches and you see where is it finding this information from. I think sourcing is the best way to figure out the actual place where this information was pulled from. The interesting thing is you should run the same search multiple times because it does give different answers. It's not I think if that search had been run 10 times, we might have shown up 7 times, but 3 other times somebody else would. So you have to run these searches, see what the sources are, and then try and optimize for those particular types of sources. You've been referenced them more and more. What I do think though is that this is a very near-term, short-term type of opportunity because Google will have to change how they do this SEO stuff and how this information. And then I think ChatGPT, OpenAI will share a lot more about how they are pulling this type of information. I wouldn't be surprised if they even allowed you to sponsor and show up in these listings as well in the future. So I think short term, you do the research and try and pop up there. But in the long term, there'll be a prescriptive way to do it. That'll be defined by these companies.
I'm quickly typing who are the best seed stage or Series A funds in Boston.
Oh God.
Mark, before I have a sort of related to the AI, but slightly changing topic. We talk a lot about when the economy will come back, at least in tech. What's your outlook on how long we should be sort of focused on survival versus, bigger growth?
I think the next 12 months is going to be very telling for the pre-IPO, anywhere from seed to right before IPO market, because I think we had come into this downturn more educated than 01 and 08, whereas the executive level and the board level, we were able to more quickly speak realism into our founders to extend runway. And I think a lot of people put away anywhere between 18 months and 3 or 4 years. And those runways are coming to an end. Right. And so there's a big question out there because they're going to go raise from this fall to next fall. And that's going to be very telling. And I think AJ is right. And we're going to see a huge amount of failure. I think the degree of that failure is the big uncertainty there is how the growth funds respond because they are sitting on a lot of money and they're not deploying it. And there's an argument that says they have to. But
there could also be an argument that they give the money back.
Yes. Or try to do something different, like weird secondaries or something. It could just be different. So there's probably a mix. So I think we got to get through that in our world. Right. And at the same time, I'm optimistic about businesses that have been funded in the last 9 months and that the businesses that will continue to get funded in the next 9 to 12 months, we got caught up in 2 years ago where it was there was almost this tech bubble, right? There's a lot of businesses that were printing money by selling into growth tech because they were hiring people like crazy and they couldn't retain them. And all of that changed. And so you're dealing with a bunch of businesses that had a value prop that's no longer relevant and an addressable market that is getting crushed. But the businesses that have been funded in the last 9 months aren't that. They aren't selling to retain your employees in tech. They're selling value props that resonate today. And that probably isn't going to drastically change. So I'm pretty bullish on those businesses to build a foundation for our ecosystem. When we get into macroeconomics, that's way outside of our collective 4 pieces of people wisdom. The people that
I am an expert on submarines and Russian rebellion, though.
There you go. People that are smart there, Sam, that I talk to, the thing I'm worried about is Silicon Valley Bank and First Republic were not the only businesses that took a long position on interest rates that were dependent or debt that were dependent on a low interest rate. There's a lot of businesses that did that. And if that's true, we may have even larger businesses that are at risk of failing in the next year or two, and the Fed can't save them all. And that could have a pretty big impact on the macro economy. At the same time, let me leave on a positive note, Sam. It does feel like in 2001, when everything crashed, like it incrementally got better every year. It's not like we woke up in 2003 and like, oh, it's over. The crash is over. Like there wasn't that day. It just like kind of got better. And then in 2006, we woke up and like, oh, well, things are growing pretty good, right? So like, it feels like that right now. It feels like knock on wood, the 10% daily crashes haven't happened a lot. It's like up 1%, down 1%. You know what I mean? Like, and so that's what it feels like. And like, we'll be sitting here 2 years ago and being like, yeah, it's not over, but also it didn't get worse. And it's kind of like gotten incrementally, slowly better. That would be my guess.
Yeah,
it's a good guess.
Mark, this has been an amazing conversation. I think we've had some really good episodes. This is near the top for us for sure. So
thanks, guys.
Thank you so much for coming on, sharing your thoughts. If people want to connect with you or learn more about Stage 2, what's kind of like the best resource for them to do so?
For me personally, go to LinkedIn. I'm pretty active there. And then stage2.capital. We try to put out original content a couple times a week. And especially if you're an entrepreneur that's scaling up, hopefully you'll find our content useful.
Yeah, great. Well, Mark, thanks for joining us today. Sam, Asad, any other parting thoughts for Mark here?
No, just thank you.
Yeah, it's great chatting with you, and awesome to see you again.
Yeah, you too, guys. Glad you're doing this. Thanks for doing it for the ecosystem.
Yeah, thanks a lot.
Thanks, Mark.
Take care.
Bye. That was cool.
That was fantastic.
Did you get your fill for
Asad? Asad was.
Sam was changing topics. I was like, huh? We have more AI to talk about. No, that was like brilliant. That was everything I wanted to get his perspective on. Because he's a smart guy. Like, we think about the world of VCs. When I was coming up as a professional, for a long time, I just thought every VC is just like godlike, amazing at everything. And then as you grow older, you realize like they're just like everyone else. There's a portion of them that are absolutely brilliant. And then a large portion who was saying things like macro doesn't matter. He is the 1%. He is the elite. And he's a thinker. And so it was great to get his perspective on this platform shift. It was fascinating.
Agreed. And you're on mute, AJ.
Look at that.
Look at that.
11 episodes in, and this is where I am.
Jesus fucking Christ.
Holy shit. Can't get it together, guys.
By the way, when you were ending it with Mark, I could see the pride on Sam's face. As like, he was like, yeah, that's what a good host does. Like,
I know. I was he's like, how do we follow up? But it was great. It was
I know. I'm just really trying really hard to get promoted to the true
my little boy all grows up. He all grows up. Grows up and he grows up.
Okay. Well, we gotta grow up because we got shout outs to get to.
We got shout outs. We do have shout outs.
Yeah. We got who's got, or like, shout outs or wins of the week. You could do personal wins too. Who's got one? Asad, what do you got this week?
I'm really pulling from this one. I didn't know we were going to do one today, so let me come up with something.
All right. Well, I'm going to jump in and give mine first then.
Okay, let me think.
He doesn't even get a chance.
I don't give a shit about yours.
What do you think, Asad?
Oh, wait, you have a prepared one. You wrote it out.
Back to me.
I'm giving my shout out to you guys. I think that's the first tier to both of you. I've had an interesting week. It's been a little bit of an up and down week, and texted you both last night, and felt like I went to bed pretty quickly because I just felt a sense of calm after chatting with you both. And thank you. So I just want to say thank you to both of you.
That's me. That's amazing. We're going to be crashing Sam's pad in a couple of weeks, right?
98%.
98%.
Asad, did you think of yours?
I did. I think from a win of the week, it's just getting through this quarter, right? Like, we're coming towards the end of the quarter. This is the last episode before the quarter ends. And I think this has been probably the most tiring, challenging, trying quarter of my professional career. Last 6 months, AJ, you spoke about the last 6 months in the last episode. I would agree, right? Like, from a from being challenged and the ups and downs that you have to go through this period, it's just been so unique. And I feel like just getting through it is a win. Like, I'm excited to have this quarter in the rear view. I feel proud of the company and everybody within it for the fight that they've fought. And I feel excited for going into the next one with this crew. Like, I'm super lucky. I get to work with an exceptional group of people that are just so resilient, right? Like, you can't have resilience without adversity. And these guys are just like so resilient. They have so much grit, and it makes fighting this war extremely interesting and doable. And so I feel thankful for them, and I feel happy that this quarter is done.
That's awesome.
Sam?
I want to give a couple shout outs to people on my team. So last week was a big week for us. And last week was a big week for us for one big reason and one slightly smaller, but still big reason. The first is that, I hired Jeremy Tillman in January of 2022. He's our VP of product. And we had to build an entire product and engineering organization from scratch. And the entire history of Pavilion has been of a non-technical one, right? We were a hodgepodge of third-party services, and we never had our own platform. And as of last week, 100% of all new members are signing up through our new digital platform that we built from scratch. And we had a really strong week last week, not quite as big as the week before, but still growing, which is really, really awesome. And the entire product and engineering organization for the digital product and engineering organization for Pavilion, I want to give a shout out to, especially Sean Anderson, who leads the engineering org, and Jeremy Tillman, and Vinny Lai and Melissa Basher, who are on the product side. So this is, and now we're an agile development company. We're in 2-week sprint cycles. It's going to get better every 2 weeks. And we're going to be migrating, the 10,000 members that are existing over to their Pavilion member, to their digital experience with single sign-on, with enrollment directly from the platform into any of our on-demand courses, and so much more to come, including leaderboards and a better member directory and all kinds of cool stuff. So that's awesome. I'm actually feeling good about it even as I say it. And then I want to give a shout out to Jeremy Chaplin, who is our head of brand and oversaw and overhauled. We moved from WordPress to an entirely HubSpot powered website, and it is lightning fast, and it was slow before. And now we've got a much more robust events calendar. By the way, if you're out there listening, you want to figure out if there's a Pavilion event near you, you can do that. If you're not a member, that's okay. Become a member. But it sort of the last week was an important milestone for the development of our digital infrastructure. We're always going to be a human first business, and we're always going to be about community, but we took some major strides last week, and I'm really excited for it.
That's so cool. Like, Sam, it's really impressive. There are so many examples of companies that are, almost more like a traditional services company that try to become more product-y. And you can see from the high failure rate how difficult that is. So I think even just taking the leap of faith, but then executing, hiring the right people, and putting the right strategy together, it's such a hard problem to solve. I've been lucky. I've seen bits and pieces of this, and it's very exciting to see. And it's just impressive to see somebody execute so well on it.
Yeah.
Oh, well, thank you, buddy. Well,
here we are.
AJ, do you want to read us out?
Yeah, of course. For Sam Jacobs, CEO of Pavilion, Asad Zaman, CEO of Sales Talent Agency, and of course myself, AJ Bruno, CEO of QuotaPath. This has been another episode of Topline. Join us. Check us out on Spotify, on podcasts, Apple Podcasts, of course, wherever you get your podcasts. No longer YouTube, I don't think we're doing YouTube.
We're still there.
You can see my beautiful
face on
I was just watching YouTube. I'm like,
for the dozens of us that are watching us on YouTube.
There have been 20 views and 0 comments on this week's episode.
Great. Fantastic. Check
We're
us
not
out
yet at the all-in level.
Yeah. All right. Well, have a great day, everyone.
Thanks, everybody. Have a great week. This episode of Topline was brought to you by Contract Book. Contract Book's holistic contract management platform allows businesses to scale with accessible, actionable, future-proof contracts. Step into the new era at contractbook.com and take control of your contracts for good.
Thank you for listening to this episode of Topline. To learn more about the trends, news, and developments impacting the world of B2B SaaS, head to joinpavilion.com, where more than 10,000 of the world's top go-to market leaders go to achieve and unlock their full professional potential.